Let's go live. All right, cool. Get right to it. Pretty slow start to the week. So Monday is President's Day, if I'm not mistaken. It's a federal banking holiday. So I'm not expecting a lot of volume. However, every single time there's a federal banking holiday, everyone asks me the same question, Roy, why are the markets moving so much? And here's the reminder that the rest of the world doesn't celebrate our holidays. It's like in America, everything revolves around St. Patrick's. Like everything revolves around President's Day, Labor Day, whatever. But you realize like two countries over, they don't know a single thing about any of these holidays, do not care. They're working. They don't know it any different. Like that is what's happening over there. And so there's stock markets all over the world, as well as foreign companies, foreign funds, foreign investment firms, and foreign central banks are always moving money around, trading and active in US markets. So that's why markets will move. It's up to you what you want to do. If you got the day off and the market is at price is at an 88.6 and you can snag a quick, 2 to 1, call it a day, who am I to stop you? On Wednesday, we have FOMC meeting minutes. So we had the meeting last week. The meeting minutes are essentially like the transcript, the written transcript of the conversations had during the Federal Open Market Committee meeting. The Federal Open Market Committee is a subdivision of the Fed that deals with the interest rates, and so it's just the presidents of a few of the different banks, only the major ones, because they left out like 4 or 5 of them. They're like, all right, you guys don't matter. They're like, all right, the rest of y'all, you're coming up into this circle, and they get to just have hash it out. But I think what we've seen in the past is whenever there is disagreement amongst the Fed presidents, typically you'll see it, reflect in the next rate decision. Ultimately, Jerome Powell has the say, and he's already made his position clear. But it's important to note, like, if there's two people disagreeing with Jerome, at some point those two folks are going to flip one more, and they're going to be able to impact the rate decision. So, meeting minutes, decent mover. I'm not expecting anything crazy from those. Uh, yeah. Flash manufacturing PMI. Again, really not much for us to work on here this year or this week in terms of volatility, which is good. We have a ton of other stuff going on with the primary elections and, you know, the aid package that just came out and the tech bubble that's kind of, some folks are speculating is coming to an end. So we'll go through that. All right, Sunday market outlook. We're going to go through charts. We just went through the news for the week. If you have any questions, comments, concerns, put them in the chats. Make sure to hit like and subscribe if you learned anything during the stream. And of course, catch us every single morning. Damn, I almost fucked that up. Catch us every single morning live, 9 a.m. Eastern time, or sorry, 9:30 Eastern time, New York market open, live on YouTube every morning. All right, let's get started. NAS 100. NAS 100. I'm going to do a cardinal sin that you're not supposed to do on YouTube, and because obviously I'm going to trust the YouTube folks here for a sec. Uh, I'm going to go grab something to drink. All right. There's like 3 things you're never supposed to do on a live stream to keep the continuity or the algo, whatever. You're not supposed to take a bathroom break or just hop off. There's not supposed to be any dead silence, just for long periods of time where there's nothing going on. And you're not supposed to, what was the other one? Oh, I forgot. Uh, but this is trading. So I'm about to do that. I'm about to break those rules. The people that watch the recording later, it's called the fast forward button for a reason. And we'll tag the different segments of the Sunday Outlook in the description so it's easier for you to find. All right, problem solved. I'll be back in 2 seconds. Go grab something to take notes with because I will be, going through a little bit of fundamentals too, but I'm going to be doing it quick, mostly because I'm sleep deprived. I got about 20 minutes left in my gas tank, and I'm gonna get you guys this info, whether I do it quickly or, that's really the only way. Give me 2 seconds, I'll be right back. Oh, and of course, if you have any questions, throw them up in the chats now or forever hold your peace. All right. Appreciate everybody for their patience. I'm back. I'm back. I'm back. I'm back. All right. Let me see. Any questions? Good morning from Kenya. What's up? Will market fill in the gap? I don't know. Good evening, Roy. Good evening, Digital Era Elevation Group. Can you do a breakdown of US30? Let's rock it. All right. I'm going to do this pretty quick, and we're going to talk about. Oh, this is playing in my headphones. So what's going to happen is I'm going to break down the charts real quick. I'll do a little bit of education and also actually I'll skip the education, go through the charts, show you guys my price levels for the week, and then we'll talk about fundamentals for a second and I'll give you guys my outlook. As a reminder that you're not obligated to be here. If you like the stream, drop a like. We'll see you guys every single morning for live trading. All you got to do is just come stop by and learn. But if anybody here feels like like this is not for you, uh, there's something called the Close app feature. It's a new revolutionary thing. Never heard of it. You literally just close the app. Isn't that a wild concept? Wow. Okay. To be honest, I have not looked at NASDAQ all weekend. Mostly because of how busy I've been. Haven't really back tested, haven't taken a look at the charts. But this is pretty straightforward. Should only take a few minutes to see whether your strategy is available or not. If it's taking you longer than a few minutes or even 20 seconds, honestly, chances are there's two things. Number one, the market conditions are either too choppy, or more than likely, you don't have a clear enough strategy so that when you look at the charts, you know exactly what you're looking for. And if your strategy is just not crystal cut, then it's going to be hard for you to build a trade idea. For me, I build trade ideas pretty quick. Finding the trade, the analysis is obviously the easy part. It's the waiting for price to get to entry, not entering prematurely because you think it's going to bounce from a different level, not over leveraging on certain positions while you're scaling in so that you can actually hold the full trade. That's the stuff that matters. Finding the trade idea should be, fairly quick. Okay, so retest of the weekly lows from last week would be ideal here. This is To me, this is pretty straightforward. There's two options. Just like every week, there's always going to be two options depending on how aggressive the market is. The market may very well just create that support here at 17,475. And so the way I look at trading is not price will hit here and it will go up, right? That's a very naive way to look at trading. Instead, it's an if-then scenario building kind of framework. So the way I look at this is if price gets to the 88.6, that's condition number one, and price rejects and creates some kind of rejection pattern on the smaller time frame uh, at this 88.6, that would be number two. And then if the market shows bullish intention or you see that one confirmation that you're always looking for, whatever specific pattern that you're used to trading, that would be your third confirmation. So it's like when or if, not when, but if price gets down here and price does, a few of these things, then I will. And then the blank here is just whatever action that you're going to take. Okay. If you're telling yourself, oh, dude, price has to hit this level. And so you're like, oh, let me just sell it down to here. And that's where a lot of, beginner traders start to make mistakes is thinking about trading in terms of absolutes and in terms of certainties. Because that's when you do dumb shit like sell to your entry, sell it on the way down to your entry. Because that fundamentally makes no sense. Like unless you're a hedge fund and you're running strategies to hedge, it makes no sense where if you think that this is a buy zone and this is where you're going to take profits, meaning this is like high and this is low, that you're going to be selling low, right? What's that old cliche? It's buy low and sell high. It's not sell low and buy high. And so, like, all these little things are you're operating from a very, very wrong perspective about trading because you're thinking about absolutes and certainties as opposed to probabilities. And, you know, that's the big difference. We'll talk about the prop firm situation. I just had a great conversation with the VIP members here on Zoom about what it looks like. And we'll try to do a quick breakdown, but we just covered it with the VIP members here. I bought a long for Google on Friday. Was that a good position to get? Can you take a look at Google, please? I'm okay. There's two ways to if you're going to be buying shares of any company, it doesn't matter what the chart says because chances are you're going to be holding this, or at least ideally, for 2, 3 to 5 years. Nobody should be buying investments that they're looking to like trade, right? These are not trades; they are investments. And so Google's like, is Google going to be here in 3 years? Yes. Is it going to be bigger than it is today? Well, if they're building AI and they have all the data in the world, that means that whatever the Google of the future looks like it's going to make whatever Google right now is look insignificant, like make it look like child's play. Why isn't this a good level to look for buys? I don't know. Bro, I heard you converted to Islam last week. Congratulations. That beard is looking very halal. You're funny. It's just Sharia law needed ASAP, bro. You gotta chill, bro. I did not convert to Islam, right? Shout out to shout out to everybody out there, bro. It's all peace and love, everybody, right? No matter what God you believe in, we all came from the same one, right? Christ is King. Throwing that out there, you know. Um, that's just where I'm at with this. So okay, yeah, it really doesn't get any easier than this. Scenario one is if price gets here and we see the rejection and price is holding that weekly support, I'm taking buys. I will buy at hold on, I will buy at with a stop loss TP. Like you got to have your trade already set up based on these conditions. Okay, the market decides these. These are the uncontrollables, independent variables, I think. And then these, I'm so bad with the scientific method. One of them is dependent variables. The other one is independent variables. Y'all, you guys get what I'm trying to fucking say. One of them you don't control, the market does. And these set of actions, the I will actions, where you're going to put your stop loss entry, where you're going to take partial profits, are you going to buy or not? Are you going to wait? The actions that you are responsible for, the controllables, go down here. And so if you build every trade like this and you actually write it down, eventually you don't have to write it down, right? When I'm on a live stream and I call it live and I say, yeah, if price, breaks through the level and closes back above, I'm going to scale into my entries. I'm saying it in advance because if you're going to wait until price does something to get to a certain zone to make a decision without a plan, chances are it's not going to go your way because you don't have a way. You don't have a plan. You don't even know what is supposed to happen when you entered that trade, right? So 88.6, I'm looking at 17.475, and there's a lower level. There's an even lower level down here at 17.251. So every week I mention two levels. And what usually happens is we either just sit around and play at one of them all week, in which case every time it hits, you can buy it, right? Don't waste that kind of opportunity. Or the market's going to make a deep retracement back to the lows from last week to finish this 88.6 beautiful impulse up, 88.6 correction, liquidity grab through, and home sweet home. I would love this, right? This would be a fairy tale. But if we end up holding this support here, that's good too. All right. So 14 or 17.475 and 17.251. Don't say, write it down in bold letters so I can come back and say I told you so. Because I feel like people just don't give me the credit when I literally call these trades on Sunday. And then because I only ever go back and post a screenshot. It's a lot of fucking work, which is why we're getting a media team to come help us clip the live streams when we win so that people can see the before and afters and see that there's a method to the madness. But write it down, because until this guy starts chopping up these reels, the I told you so's like, it's, the receipts. And also so you can take the trade and make money. Remember that part. Okay, good stuff. We can sit here and analyze how overextended price is. We can sit here and guess that the market is ready for a turnaround. I would tell you guys that when the market is ready to crash, it's gonna be brutal. It's gonna be just something that looks like this. And it's not my job to catch that whole thing. I don't care. Is it cool to catch one of those trades and you make the biggest trade you've ever had in your life and it's so easy because it happened in the span of 4 hours and there was not a single retracement in that sequence and it was just nothing but the stock market goes up like a escalator and goes down like the elevator. Stock markets go up like the stairs and go down like the elevator. And so it's going to be quick. And so instead of trying to guess that top, and then every time you try to guess the lower high and you start shorting, that it just continues bullish and you just keep getting crushed out. Just keep buying it as we've been doing at all of these structural levels. And then the money that you make along the way, whoever sells it and makes that money, it's going to be a 1% of 1% people because it's kind of like a lucky thing to guess the exact top without insider knowledge. So that's my argument for not trying to guess the top, not trying to predict the turnaround, not trying to feel your way through it. Oh, I feel like we're overextended. Oh, I feel like no, no feel. What's in front of you? What would a computer do? What would ChatGPT do? Oh, I feel like the market. No, ChatGPT would take the trade or not take the trade, depending on your plan and your strategy. All right. So mechanical, that's how it's got to be. Let's take a look at the DXY. The DXY, oof, oof. We're at a major sell level. Both magnet zones have gotten hit 1037 and 1045. And it looks like the market is either going to come down and create support right here. Because again, you guys have to, this is a piece of education for everyone. This is what you will learn on Baby Pips if you're looking for, if you're looking for trading advice. They'll tell you that the market will find an area that used to be resistance, and then it's going to break above, use it as support, and then keep going. But what will typically happen is something a little bit uglier. It's like if it's going to go bullish, it'll go through the zone first to establish that bullish intent and to kind of establish a new range. But then the market has to come back and pull back. Now, a lot of people think that it's just going to do a perfect touch at the previous support resistance and continue. Okay? No. If the market's bullish, it'll go through the zone, come back just a little bit under, higher low, and continuation. If the market wants to sell, what it'll do is, and by the way, if it's going to be a buy, if it's going to keep going, it'll hit the resistance first, do a little, exactly like what happened here. It'll do a little bit of a dip off to entice the sellers to start getting in. And then massive buying pressure comes in to either kick everybody out of their trade before the real sell or for a continuation. And you can tell which one it is by how many of the candles are closing above the zone, how much support is being formed, and new floor and new lows are being formed in this upper range. And if you're seeing day after day, like this was I think a week and a half, where the market is just closing in this top range, if there was enough selling pressure and if there was like a macroeconomic reason or if there was some kind of fundamental news event that would have crashed price down, it would have had to happen already, right? So, I mean, maybe there's something to come, obviously. We don't know the future. But in the past, 2 weeks, there wasn't any news to crash and we were creating support. Okay. And so now what the market will likely do is come back inside the range one more time. Why? Think about the market makers or think about whoever is designing, the NASDAQ, whatever. If you entered buys right here, right there at that support, and you were in profits off that one candle, that's a daily candle. You're probably sitting good. You're probably very excited post Jerome Powell's speech. Things are looking good for your EU shorts and GU shorts. And then all of a sudden, you get a massive wipeout of these lows, and the market comes back to test the 88% of this previous break right here. 886. Continuation. Make sense? So long story short, if the market's going to go bullish, little rejection here to entice sellers, clear break above. You want to see multiple candles closing above the range, retest, and at least wick through. I'm not talking about a full grab, but at least wick through and then close back above. Once you see all of those different elements, I wait for the pullback, the second low, and that is usually the entry that I take if I'm looking for a continuation trade. All right, I really hope this made sense. Uh, yeah, and if the market's going to go bearish, it'll show up here and just go right through the zone. Like, oh, maybe my sells are wrong. Maybe my sells are wrong, and then it'll do a retest and then build. Can't break the previous high. Then you have a breakback under the low. All right, so like all these different things will help you figure out whether the market is going to continue or reverse. And that's why it's important, number one, to understand price action generally, higher highs, higher lows, continuations, reversals, not the generic stuff, like really how this stuff works, right? How many people are buying the retest here because of this stuff they learned online? It's like, this stuff could get dangerous versus the market breaks back below, breaks back under the range. You get a pullback of that high and you can short it all the way to the bottom of the range. Beautiful. I don't think that's what's going to happen here. I am still bullish on the dollar. I think there's tons of reasons why the US economy will, just for scarcity reasons, will outperform other currencies around the world. The DXY is not the dollar. It's the US dollar index. So it's basically like the dollar versus a basket of other currencies. So it's not like the dollar is doing well. If every other currency in the world is going to shit at the same time, we could still have the DXY going up. And that's what I think it's important is that currency value is relative, not absolute. It's relative to each other. Yo, is the dollar a good investment? Is the dollar good to get? It depends how bad everything else is. Make sense? Okay. Awesome. Based and Jesus pilled. Okay. I don't know. What's your take on the whole prop firm situation? I think prop firms will survive, but not in their current form. I would say if you guys are looking for US firms, I would hold off for now until the dust settles. I think that it is unlikely for the US to get reinstated here. I think that every prop firm will find an alternative platform to MetaQuotes to partner with in order to run their trading flow. And I think this is going to open the door to some legit companies taking over the industry, but I think it's also going to open the door to figuring out a way to create firms without MetaQuotes, which I think is like if we thought that 2023 was bad with how many new firms were coming up every day, like it seems like they were all just fucking popping out left and right. I feel like it'll get so much worse if people are able to find a turnaround. But regardless, this is a US regulatory issue. Now, clearly, MetaQuotes took control of this. That's how it didn't come from regulators. It came from MetaQuotes. But it sounds like MetaQuotes got audited. They were under scrutiny for having US clients. And this all is going back to allowing US clients access to Forex trading. The brokers got in trouble for it 2015, 16, 17, and now the prop firms are facing the same heat. And I hope that everybody learns from the previous busts and booms in this industry to be able to build something responsibly. And to the people that kept asking us why we don't have a prop firm and why we don't have a broker and all these other things, I hope you guys now understand the, let's say, the legal risks of running companies like this. And no matter how much money you make, if you're out here tiptoeing that line, if you're really, really dealing with that shit, it can eat away at you and it's not worth the money. And you can see a lot of people's tones changed from the prop firm industry, we're going to change it forever, to, man, this sucks. Don't ever do this. I wouldn't wish this on my worst enemy. It's hard. Building a business is hard. What I would ask from everybody is if you've been personally affected by a firm, have at it, do whatever you want to do. If you have not been personally affected by any of these firms, if you don't have any insider information that nobody else does, And if you're just following every hype train on social media and then just adding fuel to the fire, you're probably helping to bring the industry down, right? Most people don't do their due diligence to figure out who is telling the truth and who's not, who is actually, backing up the things that they're saying and who's not. And so this whole Twitter situation where people are calling each other out and it's getting messy is going to put a strain on the whole of the industry. And all of us need prop firms. We don't need them, obviously, but I just explained this earlier. Do I want a $1,200 margin account on Oanda? Or do I want a $20,000 worth of margin in a 200K prop account? I would take the 20K of margin in a 200K prop account, and I only spent $1,200 on it versus putting the 1,200 in a 1 to 30 leverage account with Oanda. So we need prop firms in this space. Let's hold the wrong ones accountable. Let's probably let's support the right ones. But adding fuel to the fire with all the bullshit, I think that shit has to stop. That's just my personal opinion. Do you think Forex traders will move to trading futures due to meta quotes? Yeah, I don't think anyone has a choice at this point. I think that, well, I don't want to say like traders, because unless you're in the US, you're not affected. And what we're going to show this year at the FX Summit conference is that the rest of the world is bigger than the US when it comes to trading. You can't have a burgeoning Forex industry in the United States when trading CFDs is basically illegal. And they're doing every single thing they can to make sure that US, like the whole, okay, we can talk about the legality of this stuff later. In case you guys don't know, formerly I was a licensed broker dealer in the United States at a Series 66 license, Series 7, SIE, the rest. And so I can give you guys my legal kind of rationale for why Forex trading is illegal. Because as soon as I saw it, that's when the questions came up. If my client was accredited, meaning they were making over $1 million a year and they had $5 million in assets and liquid or illiquid net worth, then they would be considered an accredited investor, meaning that they were sophisticated enough to be able to buy alternative assets, alternative meaning alternative to traditional assets like stocks, bonds, mutual funds, and the rest. And so the only way you can get in on these hot investments is if you were already rich. So they were giving these opportunities to rich people, and the average person can't get in. Private equity and venture capital is another one. Someone's about to launch it, like we're about to go public with ChartAddicts, launch a big company. But the only way you can buy shares is if you have the only way you can buy shares is if you're an accredited investor. And then the thing takes off, becomes the next Amazon. Now everybody who actually needed the money, who would have been able to change their family's life for generations, can't. You already had money. Now you got a lot more. And so I think these laws around the sophistication of investors and protecting investor laws, they destroyed the crypto industry for sure. And if they keep going, they're going to destroy the trading industry too. And I do not understand for the life of me why the regulators will not set forward a clear rule book for crypto and trading to allow these things to happen. How I'm about to get, I know it's Sunday. I'm about to get a little, I'm going to rant about this for 10 more seconds and then we're good. How the fuck is gambling legal in the United States, but trading Forex is not? I'm struggling so I'm trying to stretch my mind to understand what type of clown show that we're in, and I can't make it work. But as long as these are the rules, the firms have to play. And if you guys are going to go for a US-based account or US-based firm or somebody who is serving US clients, and I'm not talking about the futures firms right now, I'm talking about strictly the FX firms, please be careful. One by one, they're getting kicked out. One by one, MetaQuotes is ditching. One by one, the other brokers, Think Markets, Purple, and what was the other one? Think Markets, Purple, 8cap, right? Black Bull ditching their relationship with their firm. Like, this is happening every single day now, and any company that says that they're exempt, that they're the exception to the rule, wait 3-4 days. The announcement will come. Okay? And like I said, we're here to support the prop firms as long as we're supporting the legitimate ones. I was referring to US traders. Yeah, we don't have a choice. grab a futures account for now. Those are probably going to get taken at some point because we're back to square one. And so, look, we've a lot of people who've been trading since before, let's say 2020, traded without prop firms. Okay. I know exactly what I would do. It's going to have to be a high risk strategy. It's got to be very consistent, and you have how you scale the account and how you protect your profits along the way while scaling becomes the name of the game. So it's not this like maintain consistent rinse and repeat thing anymore. If you're looking at how to build a small account, like my approach is completely different. You look at a 100K challenge, for example, you might do moderate to high risk on this one. Moderate meaning anywhere between 0.5% to 1%. High risk meaning anywhere between 2 to 3% risk per position, which is kind of crazy. But 1 to 2% on the 100K challenge. Once you get funded, typically for myself, I'll reduce the risk. I mean, now that there's no time limit, I have found myself reducing the risk in the challenges, but it makes it take too long. That's why I prefer to go slightly higher risk, because when you win 3, 4 trades in a row, you got to make it count. And then when you get the account, you kind of reduce that. With a $500 account, it would be a completely different strategy. For me, I'd say, okay, how much am I willing to risk per trade? So for me, with my NASDAQ strategy, with the win rate that I have, I'm willing to risk $50 per trade on this account. What is that? That's 10%. I'm risking 10% per trade, which is nuts. However, the whole beauty of trading Forex CFDs is the high leverage. It's being able to do something like risk $50 on a trade and then be able to make 3, 4 times your money back. To be able to take the account from 500 to 650 in one trade. That's 30% more. That's a 30% increase in your balance off of one trade. Okay, so then what I would try to do is I would try to take no more than 4 trades in a week. And we've done this experiment before. You guys can obviously play this out. My bad, guys. Somebody walked in. I thought I was on a live stream. All right, you guys can do the example for yourself. If you lose all 4 trades that week, your $500 account is now sitting at $300. Okay, if you win all 4 trades, let's assume that you're going for a 2-to-1. Let me not go. Some of you guys might not be getting the sniper entries, and some of you guys might not be kind of scaling out of the trades appropriately. So let's just assume that it's a 2-to-1 straight up. That'll be 100. That'll be $400. So then your account would be at 900. Okay. So if you win all 4 trades, your account is sitting at 900, but you almost doubled the account in a week. If you lose all 4 trades, you're down a pretty significant amount. You're down almost 40%. Okay. Now, the reality of statistics and the reality of the probability distributions is that winners and losers come in clusters, and the chances that you lose all 4 and the chances that you win all 4 is about the same. Now, if you have an edge, it skews a little bit, obviously. You have a better chance of winning all 4 than losing all 4, but you guys get how it goes. So your distribution is going to be somewhere in between. So you might lose 2 trades, that's negative $100. You win 2 trades, that's positive $200. And then you're still net positive for the week, $100, which is 20% of the account. You're up 20% for the week off of a 50% win rate. You could lose 2 of the trades, win 2 of the trades, and that's your win rate. Now, if you lose or if you win 3, that's $300. And this is assuming you have a 2-to-1. Ideally, guys, you do want to be aiming for more than a 2-to-1 when you're dealing with these smaller margin accounts, because losses do come. There's tons of slippage and fees and tons of other things that you can't account for with a small account, and they start to add up. If you're trading in and out, it's going to cost you in commissions and fees. And so just the higher risk and reward is my safety net to make up for any cluster of losses that will inevitably come. It'll give me a good cushion. Now, you win all 3, that's $300. You lose one of them that's 50, and now you're up 250 for the week. So you're up 50% on your account. So if you have a 75% win rate, so 3 out of 4, you're coming up 50%. If you have a 50% win rate, then what about 100? Then you're going to be up 20% on the account. All right, play this all the way through. You guys get the drill. This is the math behind it. I know we went a little bit too deep into this, but if you don't understand the basics of just looking at an account, figuring out how many chunks does this $500 make? All right, that's 10 $50 trades. That's 20 $25 trades, right? That's 40 $12 trades. And I'm talking about risk over here. So if you want to ask yourself, how many trades can I take? How many trades can I lose in a row without going bust? If the number 10 sounds like a comfortable enough cushion for you, you can go and you can risk that 10%, which I don't advise, for most people. Being in between 10 and 20, or even being at the 20, I think is the most, really is the ideal situation to be at with these margin accounts, because that you're not going to lose 20 in a row. And then win some, lose some, win some, lose some. To lose 20 net, it's tough, especially with the strategy that we have. Okay. So split it up, have a good risk and reward so that the $25 that you're risking or the 50 that you're risking has a multiple that comes back. And that's how you build any account on any platform, on any instrument, anywhere. Cool? Beautiful. All right. Ken sent an 88.6 on what pair is this? Let me see. On US30. All right. Let's do U30 real quick, and then we'll call it a day. No fundamentals. We'll do that tomorrow since I went through the trading education. Okay. This is the trade from last week. Yeah, I see it. Yeah, no, I definitely see it. We see this area of resistance right here. So again, if the market's going to break, then we're going to get it here, and then clear break above. Okay, retest, and then come back in. If we see this double bottom like this, you guys see the double bottom here. You guys see all the double bottoms here. If the market comes back for that second bottom after it breaks, it's going to continue to the upside. What I would personally like to see is a push up to this area of liquidity. This is where sellers are typically stepping in, anywhere around this area. And then I want to see a pullback to this 88.6 that we didn't test last week. All right, might go a bit lower, 38,300. So it's either going to keep forming the support all week, in which case, guys, we can scalp buys all week. Right? If it just continues to form the support. I know you guys see this. Every time the market gets here, buys, retest here for buys, double bottom. And then, of course, Ken sent out perfectly body to wick, 886, double bottom. Also, for my masterclass folks out there, let me blow your mind real quick. So obviously he showed the 886. There was the break. Okay, beautiful double bottom right here. But then we also have phase one. Come on, don't embarrass me in front of my friends. Phase one. Phase two. And then phase three. Right? Or we consider this wick above to be phase one. What time was this? 8 a.m. Oof. I'm sorry, guys. The direction of the first fake out was up. Like, Roy, does that little wick really count? Yes, it does. That was the direction for phase two. Oh, sorry, this is the direction for phase three. Excuse me. Phase two. double bottom retest, and continuation. All right, so the next target is always the high of the box, then the 88.6, then the top of the range, and then the Fibonacci extensions. All right, so if you're scalping, well, not really scalping, but if you're kind of intraday trading this range, that's the easiest way to take partial profits. Bottom of the daily range, top of the daily range, 886 from the previous swing, and then previous high. Okay, awesome stuff. How would I enter this trade now? Solid question. It's going to do this. It's not going to do this. Let me not be arrogant. If price comes back to the 88.6, and it's going to come up probably a little bit above to this 78.6. So it comes back to 38,590 and forms support on the smaller time frames. I'm buying it up right here. Okay, so while the market is in motion, we don't chase, we wait. It's better to miss the trade than to try and chase it, because all of a sudden you load up a few entries, then get caught in the retracement. You do not want to do that. Okay, so entries matter. Yeah, wick entries matter. You don't need them to make money. Obviously, it's not the goal to have a wick entry, but it sure as hell helps your risk and reward and your mental, peace while you're in the trade. Okay, UJ has officially hit the final target, and it's the 88.6 from the previous high. Isn't that crazy how this kind of works on every pair? Okay, so very simple. This is the most recent impulse. I mean, clearly this is the bullish impulse, and then a retest, and then we're in the middle of another bullish impulse. But the only way to know if the market is reversing or if it's retracing is if we form either a lower high or a double top. That's typically what will cause a market retracement. If we look at all reversals or all the beginning of every retracement, it comes with some kind of reversal pattern that's either a double top, one of the disjointed double tops where it's a lower left shoulder than right shoulder, right? This weird dislocated right shoulder, got the hunchback of Notre Dame right here. And then, of course, the head and shoulders, right? These are my favorite go-to patterns. I know it seems, simple, whatever, but it really, this is really as complicated as my trading gets. If you really want to get into it, there's also, right, there's the fake up and then drop. And then, of course, on the other side, it's the sideways, retest, and go. These are, to me, the best because it'll happen all the time on every time frame and every chart. I'll give you guys some examples here where you'll have the market consolidate, push up, come all the way down, and then rock and roll. This is a pretty funny example right here. This is a bearish example. We have consolidation, fake up, and drop. All right, let's not get too deep into that. Let's talk about USD JPY. We're at the 88.6. So are we going to form the double top and drop, or are we just going to come down, make a retracement, create new support, and then continue to the upside? Personally, if price comes down to create one support at 147.3, I will buy it. I'm bullish on the dollar and I'm definitely bearish on the yen. Recipe for more upside. However, everything has its day. Everything retraces. We just finished a massive impulsive move. We might be in for a correction. All right, so I definitely wouldn't be buying it up here. And then personally, I don't trade against the trend, and so I'm not looking to sell it. And so my life just got a lot easier. I get to do nothing. Right? If we see if I personally see a sell-off and then the market comes up for a double top and then rejects again, like we're really creating resistance candle after candle, I'll consider selling here. Just for a shorter time frame play for 4, maybe 5 days. Get a much needed retracement, and then the market can continue the overall trend. And ideally we would have bought it at the discount. Either way, I'm not doing anything on UJ for now. Clearly, we're at the top of the range. It's about to start retracing. I want to see a retracement down to this 88.6. Roy, what 88.6? This one right here. 146.7 on UJ. Okay. We had an expansion up. Right now, we're at a higher time frame reversal zone. Okay. It's like poker. This is the full house. Okay. You had the daily 88.6. That one wins. However, once that's done and the trade has basically like already mostly played out, it went to TP1. Okay. And you're at the 88.6 from the recent impulse. Now this, right? This is like a three of a kind, and there's nothing else on the board. It's not as the highest probability as the daily 886, but it's still in the direction of the trade or in the direction of the trend. You're still waiting for the area of structure to get retested. And then you're still you're still using the same overall entry strategy. And so the risk and reward and the risk parameters add up. Okay. NVIDIA earnings report will come out on Wednesday. Market close. Okay, we'll see. It's Goldman. Thank you. The 400 backtesting is taking a lot of time, but it's definitely worth it. You will have it with all the nitty-gritty details. It's going to blow your mind. I can't wait. Said gold went crazy. Put a one in the chat if you guys heard me talking about gold at 1997 and 1998 for like a month straight. Anybody hear this? You guys were there on the stream last week too. Who remembers? Put a one in the chat if you guys remember me talking about this for over a month. I don't know why you would buy a Fox firm, even if it was legal. Futures prop is so much more affordable, and you only need 6% to pass. Yeah, but it only has a 4% maximum loss as well. And there's so many ups and downs to both. And it's more expensive to get the same amount of funding. So like, yeah, it's cheaper at the futures firm, but you're limited to a 150K account. Now I have to buy 7 of them. I'm spending more than I am at FTMO. Okay, well, if you're saying 50, what firm are you referring to? We just went through gold. I mean, I've been talking about gold for months. Like, there's no surprises here. Like, we've literally been talking about this. Kunal, I know you saw it. Infinity, I know you guys saw it. Jordan, I know you saw it. Quinn saw it. You went long in 1988. Shared on your Instagram too. Bro, didn't I share it on the Instagram and said something like thank me later or some wild shit like that? Didn't I say some cocky ass shit like uh yeah, you might be mad at me, but thank me later or some shit like that? I don't know, bro. All I know is I'm built different. I don't even trade gold. Still did that, right? And yeah, it really doesn't get any easier than this. The CA traders, you know exactly why I entered there. It is what it is. We have beautiful retests right now. I could see gold going all the way up to 2032 in the next few days. And then, I mean, if it continues to break this level, again, the strategy works on every instrument forever and ever. All right. You already had your phase one. We're entering phase two. And I think at 2066 or 2067. Okay. So here's the trades. Essentially, there's a buy right here at the double bottom, which will form later this week at 2005. Okay. What a great year before anybody knew anything about anything. 2005. It was right after the tech crash, right before Lil Wayne was popping in '08. Trash music. It was the oversized tees. But Young Jock was the most popular artist on the street. Bubba Sparks, right? I'm making this up. I don't know if that was 2005. I'm just thinking of visual cues to help you remember the level so you guys don't forget it like the first one and miss the trade. So I'm thinking Bubba Sparks, but that might have been even after 2005. Somebody correct me, bro. I'm 27. I don't fucking know. Ken said crystal clear. Yep. You got in. Juicy J said I got in at gold at 1987. Let's go. The fuck? Damn, bro. Talk about a quick. Yeah, I don't know how else this could get any more simple. Let's take a look at Bitcoin. Bitcoin has absolutely beat all expectations this year. Okay. Beat all expectations this year. Obviously, still expecting a correction. The question is at what level, right? Isn't that always the question? Bro, I think NASDAQ is going to retrace. This black line right here marks the Bitcoin halving, which is a event that happens every 4 years that reduces the supply of Bitcoin that is mined in every block in half, making it twice as expensive to mine Bitcoin, or making the supply limited to half of the output. Either way, limited supply, and then all of this too much demand with institutions trying to get in for the ETF, retail traders who are, or retail investors who are just holding. And you can see the on-chain data shows not a lot of money is being moved on the Bitcoin side relative to the holders. You have too much demand chasing too few supply, price will go up. Now, the thing about the halvings is that historically, you guys can see the black lines, they're not followed by the bull run. Okay, typically there is 100, and so over here there's 133 days until the bull run started, 161 days until the next bull run started, 140 days before the next bull run started, but this one was, partially fueled by the pandemic, obviously, and then 2024. Okay, 147 days on average would put us at around mid-November, right at the FX summit, right when the market is about to start the next bullish cycle. And then every single year, 1 year after the halving, the price is, through the roof. And so I'm looking forward to, price following the same thing. 140 days is a long time, right? Damn near a third of the year or more. So, patience is required when you're investing in the long term. That's just the way it is. Okay. This week will be important for Bitcoin. You got to think about, crypto in a longer term perspective, because the week by week and day to day financial news might affect the sentiment for the day, but it's not going to affect an institution's decisions. When I recommended a mutual fund for my client, I'm not calling him 2 days later after it's in drawdown and be like, yeah, man, we fucked up. We're going to trade you out and do this other thing. It's like, no, we made a decision on 10 years from now, what makes the most sense for your account to hit these goals that you and I have predetermined. Okay, so the day by day does not, like, these institutions are making bets for the longer term. Are there short-term trading firms? Of course. Are there risk parity for funds and high beta funds that are trying to outperform the market? Of course. And that's why they're trying to outsmart the market. Look at how many of them succeed. Not many. If you just bought the S&P 500, you had to probably beat most hedge funds on Wall Street. Okay. Yes, Roy called it again. Catching pips. Your name is very appropriate for this environment right here, because it's literally, well, that's what we do. He said Top Step. Yep, we talked about Top Step and Apex. Def Jam fight for New York. Def Jam fight for New York. What are you talking about? This week will be important. Def Jam fight. Are you telling me to fight somebody on for Def Jam? All right, ladies and gents, happy and safe trading. I will catch you every morning, 9:30 a.m. Eastern Time, live for New York live trading. I will take my NASDAQ trades live right in front of you. I'll rationalize and explain the reason for my trade, the criteria that I'm using to execute, and you guys can come and learn a ton about how I trade and get, a little bit more insight and context about me calling these trades live every single morning for God knows how many years. Secondly, if you're having trouble getting activated for the year, activated meaning really getting going, you have set goals, maybe you burnt out already, or maybe you haven't even been able to pick up that speed, and you really want to take life by the horns this year. Let me turn on my camera so I look at you guys face to face. If you guys want to take this year by the horns, and you guys want to make sure that you are on as sharp of a, how do I say this? Have as sharp of a mind frame as possible to allow you to accomplish the 50 different goals that you've set for yourself. You got your health goals and your life goals and your family goals and your professional and your trading goals. If your body ain't right, if your mind ain't right, if your goal setting is off, you're not going to be able to accomplish big things. And so through my experience, I have been able to accomplish big things. I'm not the person who can multitask 100 things. I've realized that. But when it comes to being able to set a goal, feed my body the right things, obviously take care of myself and my health to be able to stick with this plan long enough to see it through. being able to set accurate milestones. Mindset is not all about like being Gandhi when you're in a high stress situation. But if there's bullets flying and you're in a platoon, if there's bullets flying around, being calm and confident is important. Having mindset is important. But at some point, you got to fucking move. At some point, you got to do something. Okay. And if you're not doing anything, you're still in the line of fire. So the confidence and the mindset to be Gandhi. Okay. Well, a drill sergeant is one of the toughest mentally tough guys that we know. Let's ask him what we should do in this firefight. You turn around, he's out there meditating, he's floating 3 feet off the ground. Nothing has gotten done. An important part of mindset is understanding what you are capable of. Like I'm not saying to limit yourself and to have like a clear idea of your confinements, but to know what you are capable of, to double down on those things. Most people just don't know. Set goals based on like using the skills that you have to your advantage. Set goals based on, set audacious goals for the long term, but set realistic milestones in the short term. All these things will be covered in the 3-day boot camp, March 7th. Looking forward to seeing you guys there. Kickstart your year, get yourself active. It's 10 different components. We'll be discussing diet. We'll be discussing sleep cycle and health. This is not like the chai seeds and the red light therapy crap. I'm talking about your body is built to last. Okay? The human body is resilient as almost any other organism on this planet. So if you allow your body to build a rhythm, so your sleep cycle, for example, people argue about 5 hours of sleep, 4 hours of sleep, blackout windows, the blue light glasses and all this dumb shit. Your body recognizes a familiar pattern every time. If you sleep at 10 p.m. or 11 p.m. every night, right before that, a chemical reaction will happen. During sleep, there's going to be different processes like protein synthesis and digestion and a million other things and cell regeneration, everything else. If your body knows what to expect, it can start to get there in advance. 1 hour before you sleep, your body's releasing melatonin naturally. So you feel tired right before you get to bed. You're not scrolling, not, inducing a lot of cortisol and adrenaline, staring at your phone prior to going to sleep. Now you're able to stick to that sleep cycle. Your body responds to just the most basic shit. So when we're talking about mindset, we're going to remove everything. It's going to be a zero diet, food, consumption, and information, stimulus, zero. And then you're going to add it back one by one to see what you need and see what you don't need. Long story short, mindset, big key. Let's make this year count. Catch you guys live tomorrow morning, 9:30 a.m. Eastern time. Let's crush it. Peace.